Watch what happens when I change one number in this rent versus buy calculator. At a 7% mortgage, renting finishes about $69,000 ahead. At 5%, buying a home finishes about $143,000 ahead. Same starting cash, same kind of home, same 20 years. A 2 point change in the mortgage rate swung the answer by more than $200,000. That's why buying is always better and rent is throwing money away are both incomplete arguments. The exact situation decides what mathematically makes the most sense. So I built a calculator that helps you lay out all of your information for your specific situation. Then you can just run the numbers on your own. Now let's run an example together comparing renting to buying. Meet Jacob Marcus. They're both 32 years old. They both make $80,000 a year, and they both have $80,500 saved up in the bank. A three-bedroom home in our scenario will cost $350,000 to buy, or $2,000 a month to rent. Jake buys, Marcus rents. Jake uses his cash for the down payment and the closing cost, while Marcus invests that same amount into the stock market all at once. Then every month, whichever person spends less on housing just invests the difference. If renting is cheaper, Marcus will invest the savings. If owning later becomes cheaper, Jake will invest the savings. That rule matters, because otherwise the comparison would quietly favor one side. For everything else, I just use standard current assumptions for home growth, rent increases, and stock market returns. You don't need to memorize them or understand them fully right now, but feel free to look them up when you run the calculations for yourself. They're all visible inside the calculator, and you can change every one of them to fit your personal circumstances. If you hate one of my assumptions, good. Change it and see what happens. Now, let's look at Jake's first month. His total housing cost is about $2,655, while Marcus pays $2,000 for rent. So at first, renting is definitely cheaper. But here's the number almost nobody thinks about. Jake's mortgage payment is $1,863. Only $230 actually pays down the loan and goes to principal. $230. And once you add the taxes, insurance, and maintenance, about $2,400 of Jake's first house payment doesn't even build equity. While Marcus spends $2,000 on rent and gets no ownership, Jake spends even more on costs that also create no ownership. That doesn't mean renting always wins, but it does mean by saying, oh, rent is just throwing money away, isn't always an accurate or truthful statement. Really quick, guys, if you like financial decisions without the sales pitch broken down, please drop a subscribe. That's all I do on this channel. Now, let's jump ahead 3 years. Jake's home has gone up in value. But selling a house is not free, it is expensive. After the loan and selling costs are paid, he would walk away with about $94,000. Marcus has about $124,000 in his investment account. That's why buying a home you might leave in a few years can be dangerous. The house can still go up in value, and you can still lose the comparison because getting in and getting out costs you money. Now let's jump 10 years ahead. Jake has roughly $250,000 in home equity, while Marcus's investment account is only slightly larger. Renting is still ahead, but barely. And the reason is simple. Marcus's rent keeps rising. Jake's main mortgage payment stays fixed. The monthly savings that help Marcus build his lead are getting smaller. This is where buying starts fighting back. Now let's finish the full 20 years. Before either person sells anything, Marcus looks comfortably ahead, but home equity and an investment account are not directly comparable until both people cash out. So the calculator subtracts the major selling costs and the estimated tax from both sides. Now we're comparing money that they could actually use. Jake finishes with about $490,000, while Marcus finishes with about $559,000. Renting wins this version by roughly $69,000, but spread across 20 years, it's about $290 per month. Is that meaningful money? Absolutely. A complete destruction of buying? Not even close. And remember what happened in the hook. Change the mortgage rate from 7% to 5%, and buying wins by about $143,000 instead. The answer didn't change because suddenly houses became good and renting suddenly became bad. The deal is what changed. After running this calculator a bunch of different ways, I would simplify the entire decision into three simple questions. First, is the deal actually good? The mortgage rate you get matters, the home price matters, and the rent for a comparable place matters. A fairly priced home with expensive rent can make buying look great, while an overpriced home with reasonable rent can make renting the obvious choice. That's why advice from someone living in a completely different city could be completely useless to you. Now, there's a quick check you can do. Take the home price and divide it by 1 year of comparable rent. In this example, that number comes out to be about 14.5. Lower numbers usually make buying easier to justify, while higher numbers usually make renting more attractive. It's not the final answer, but it tells you whether the deal is even worth investigating. Marcus only wins because he actually invested all of the spare money, not once, but every month for years. If he rents the cheaper place and spends the difference on a nicer car or trips or a more expensive apartment, the strategy completely falls apart. This is the strongest real world argument for buying a house. A mortgage forces part of your payment into ownership. While renting gives you flexibility, it also gives you the freedom to waste that extra money. All right, the third question. How long are you really staying in this location? After 3 years, renting clearly wins in this example. At 10 years, the gap becomes small, and at 20 years, either side can win depending on the deal. So don't ask, is buying better? Ask, is buying this home at this price with this mortgage rate for the amount of time I'll actually be here better than renting? That's the real question. And I'm not going to tell you that you should buy, and I'm not going to tell you that you should rent. I would ask you two things instead. How long are you honestly staying in that area? And if you rent, are you honestly going to invest the difference? Life can become unexpected and easily pull that extra money away from you. Answer those two questions first and then research all the specifics for your own situation and run your own numbers. The calculator is linked below. It's completely free and very easy to use. Put in the price of the home you would actually buy, the rent for something genuinely comparable, and the mortgage rate you can actually get. Then just change one number at a time and watch how quickly the answer can move. And tell me your price to rent ratio in the comments. I want to see how different it looks across the country. If you guys got anything from this video, please do me a favor and like and subscribe to The Disciplined Dollar.